It's a quiet morning in this indoor market in Hatton Garden, London's jewellery district. Charles Gabbe says it's been like this since the beginning of the year.
Thank God we had a wonderful Christmas here in the Emporium. We had thousands of people coming here and buying.
Consumers aren't buying as much gold these days because it's too expensive. Gold prices have risen around 20% since the start of 2008 to a record $1,000 an ounce.
I'm shocked.
Michael Hadjioff runs a store in the market.
I was in the business when gold was $35 an ounce, and now at this price it just seems astronomical.
So why the massive run-up? It's a perfect storm of factors. Gold is traditionally a safe haven in times of uncertainty because it has intrinsic value, and times are very uncertain. Fears of a recession in the US, rising oil prices, volatility in global stock markets. Add to that the dollar's recent weakness against other currencies. Since gold is priced in dollars, a fall in the value of the dollar makes gold cheaper for those who hold other currencies. So central banks around the world, from Russia to Qatar, have been buying gold. So have big pension funds and other investors.
What people are looking at now is an asset which will help them to preserve some of their wealth. They're not looking for gold to perhaps give them substantial returns in the medium term, but they're looking for an asset which will give them some form of a wealth preservation.
That goes for consumers as much as central banks. In some markets such as China, Turkey and India, demand for physical gold, be it coins or jewellery, remains strong. Here, premiums on gold products are low, so the precious metal retains most of its value over long periods of time. Many who bought gold when it was much cheaper are now selling scraps of it to make some cash. Some experts say they'd better hurry.
I think it's a case of your supply-demand. In other words, that you suddenly have this wave of supply coming into the market from the scrap in so many countries, coupled with a sharp decline in jewellery demand. And those two factors could combine to, push gold down. So on the investment side, you'd have, I think, a wave of profit taking as well. $1,000 would be, I think, a good opportunity, a very strong opportunity to sell gold holdings.
And maybe that will bring the customers back to Hatton Garden. Malika Kapoor, CNN, London.